starting at least in the US. It continues, it is the Yale survey on attitudes on the environment, and on climate, consistently is sort of ticking up in terms of priority and urgency in the public. I think there continues to be massive polarization around the issue. It's starting to erode around the edges, but in the it's way too political and polarized, and people really continue to look at look at this issue through a partisan lens, which is a shame. Although that's a sort of a broader conversation. I think in the climate communication space, before 2.5 years ago, we all saw public health communication as sort of the model. Like, here's an area where people just look at their health, they just look at what's best, they do somewhat rational, although none of us are fully rational beings, of course, but tend to make pretty rational discussions, with the exception of the fringes. Whereas over the past couple of years, of course, public health has now been politicized, and even that is seen through a partisan lens. So that I found quite dispiriting as to how we move forward on climate. But that said, I think in the corporate sector, in the finance sector, it really is becoming the number of net zero commitments at a government level, at a corporate level, is just very, very encouraging. And we might get into this, of course. A, the commitments themselves are insufficient. B, a commitment itself not backed up by action doesn't do a whole lot, one might argue. But I would say, actually, it's pretty important to have this concept of net zero and as a framework be out there, right? Just psychologically, typically in Kyoto and all that, we're saying, okay, like 20% below 1990, you've got these all sort of, made sense. Whereas it's saying, no. By 2050, like, we have to be at net zero as a planet, and, meaningfully before that in developed markets. So just setting that target as zero, as opposed to some percentage of 1990, I think is an important kind of cognitive step to have taken. So, I think, in other words, there's a lot of reasons for optimism, but of course, it continues to be a challenge on the public communication side as well.
An observation that I think many of us have had is that there is a lot of very creative work going on, but to get it to the point that it can access the larger parts of investors' asset allocations on terms that, at the same time, for a lot of the poorer countries in which this is occurring, is affordable, has been a challenge. And I know you all have been thinking about this, and I'm curious as to what your current thinking.
From a broader, there's the kind of direct and then systemic emissions. Your direct emissions are obviously if you're burning a forest or cutting it down and raising cows, and your more systemic emissions are as you're looking at a broader decarbonization of a food system or a waste system or an energy system. And I think when you start to look there and you look at the sustainable food system, there is, and to the oceans, sustainable fisheries are great because you don't need a lot of fancy new markets or financial engineering. If you manage a wild fishery well, it will also be, the alignment between the ecological health and your financial health is very strong, right? If you've got a healthy
Right.
fishery, it's good for the ecology, good for the planet, good for climate, and good for a long-term investor. Of course, if your time horizon is tomorrow, you want to dynamite the fishery and decimate it if that's all you care about. But if you're like a reasonably long-term investor, and that doesn't mean 100 years, but 3 years plus, then you want to manage something sustainably, right? In a way that's pretty well aligned with science and with optimizing. So there's not a trade-off, in other words, there. Broadly, I think it is possible to create high integrity nature-based carbon credits, and that there are a number of natural purchases for them, and that it would be to all of our benefit to expand that market.
Well, that's fascinating. And I'm curious on the marine front. Where are you and your colleagues? Where do you see the biggest opportunities for meaningful investment that can foster medium and long-term marine conservation.
Fish are an incredibly efficient protein production mechanism. So from a, compared to like a cow, right, that has to grow all these bones for gravity and all that leather. When you just sort of think about kind of efficiency of protein production, fish is just one big muscle, a lot of them, right? And so they're very, very efficient uh, uh, protein production mechanisms. And so just from that narrow food production perspective, it has a lot of tailwinds going for investments in, across the value chain of sustainable seafood. And these can be, across many, many geographies as well. And fisheries restoration, I think if you can get rights to fishery, that, the IRR on a recovering fishery is extraordinary. If you get the
Right.
science right, these can be fantastic investments. And the trick is making sure you are uh, here again, the social um, dynamics are also pretty well aligned with the economics, insofar as if you uh, pay attention from the beginning to local fisher people, to, fair tax regime, et cetera, that you sort of line up all your ducks from the government down towards the local fisher people, and you make sure that that's all fair. That will also make it more sustainable, as opposed to, having licenses pulled from you, or political unrest, or all that kind of stuff. That, you have another alignment between the sustainability and the profitability of your business.
And it's interesting what you were saying a couple of minutes ago. I think one of the big challenges is that there are so many highly worthwhile activities that can target the kinds of issues that you've raised here, whether it's in the marine environment or the forest environment or what have you. But I keep hearing from some of the major institutional investors that they have, there's of course the return targets that they have to have as fiduciaries for their clients. But in addition, there's the scale at which they can actually reasonably expect to operate. And I've talked to some who say, look, it's hard for us if the ticket size is less than 25 million or what have you. And so I think there's a challenge to trying to aggregate a lot of the work that we all want to have done, to aggregate it and position it so that it can cost effectively access. And I raised this at the beginning of the discussion: cost effectively access these savings pools that are huge. The money is out there, and I think the challenge for us has always been to try to figure out, how to access it with instruments that are going to fulfill those clients' fiduciary responsibilities and at the same time be practicable.
Yeah, 100%, and that's something that we see across, and that is a dynamic that we're very focused on, right? Not just to fulfill the needs of institutional investors, and that's where the money is, sure, but also because you need that scale to actually make a difference from a climate perspective.
Right.
And so absolutely all of these,
Yeah.
there is a bias towards centralized scale in both energy and in the nature-based solution. It's easier to do a big project, or in other words, or maybe we should say, it's just as hard to do a big project as to do a little project. So you might as well do a big project, right? And so there is that bias. But that said, when you go and look about what actually needs to be done, I gave the example of that small business. It's a similar thing when you look across agriculture, right? There's so much, I forget the statistic, but close to 50% of global food production from smallholders, right? So there's so much work to be done in with individual farmers and improving their yields and improving their, bringing regenerative practices to smallholders, agroforestry to smallholders. These are basically microtransactions, and aggregating them into a broader carbon project or ecosystem markets is also something we're spending a fair amount of time thinking about. That to me is one of the promises of some of the blockchain technologies. I'm not
Yes.
yet sure if that works, but at least in theory, here you have something that is distributed, low cost, verifiable, and can uh, operate at that many microtransaction individual level and aggregate to a sort of central blockchain. So all sorts of challenges in implementing that, but I think theoretically there's an attraction to that, and we're starting to experiment on that front as well. But absolutely, I do think that that's one of the um, that we need the low hanging fruit of the big easy projects is sort of done, or it's not completely done, but
Yeah.
yeah, the
Right.
efficient frontier to me is in these efficient aggregation of smaller projects in one form or another through corporate structures. That's why, if you invest in a small business lender, that's a natural aggregation. If you invest in a microfinance company,
Yes.
right, that's already a natural aggregation of many small loans. So that's why we do spend a fair amount of time in that financial services space, because they are natural aggregators of these products, and then they can be securitized, or specialty lenders, right? You see that with groups like Mosaic or Sunrun in the U.S. that aggregate and then securitize a lot of solar loans. Those are in the U.S. context. So more of that needs to happen.